month was a reminder that markets can turn quickly when geopolitics, policy uncertainty, and growth concerns come together. Global markets were volatile throughout the last month. Rising tensions involving Iran unsettled investor sentiment and brought concerns around oil prices, inflation, and global growth back into focus. Hi, I am Saurabh Shrivastav from the research team at MFA, and you are watching Story of the Markets. In the US, equities remained under pressure, while bond markets signaled caution. Treasury yields fell below 4% and the dollar weakened, reflecting concerns around slowing growth and an uncertain policy backdrop. Commodities also moved sharply. Gold corrected after a strong rally, while oil prices rose as the Middle East conflict intensified. In Asia, markets such as Japan and South Korea also corrected sharply, though they recovered part of the decline quickly. Back home, India remained relatively resilient. GDP growth for Q3 FY26 came to 7.8%. Manufacturing and services activities stayed healthy and GST collections remained strong. Inflation edged up and foreign investors remained sellers, but domestic flows continued to provide support. So what drove markets this month? Three things stood out. First, geopolitics. Rising tensions pushed markets to increase oil prices, stickier inflation, and weaker global growth. Second, policy uncertainty in the US. Mixed signals around tariffs and trade added to investors' nervousness. Third, economic data. US growth slowed sharply versus the previous quarter and business activity indicators softened. What does this mean for investors? It means markets may remain noise-driven in the near term. But volatility is not just a source of discomfort, it also creates repricing, and that can open up opportunity. In India, after the recent correction, parts of the markets are beginning to look more reasonable from a valuation perspective. This is not a time to react emotionally. It is a time to stay diversified, stay selective, and stay focused on quality. Looking ahead, the near term may remain uncertain, especially with geopolitical developments still influencing oil, inflation, and investor confidence. At the same time, there are reasons to stay constructive. India's growth remains relatively strong. Government capex continues to support the economy, and earnings momentum is expected to improve in the later half of FY27. As global noise settles, markets are likely to shift focus back to earnings and the structural India growth story. So the message this month is simple. Stay alert in the short term, but stay committed to the long term. Yes, uncertainty is back, but so is opportunity. And for disciplined investors, phases like this often create the foundation for strong long-term returns. We remain committed to managing portfolios with that mindset, identifying risk early and also spotting opportunities when markets become uncomfortable. Thank you for joining us for this update. If you would like to understand how these developments may affect your portfolio specifically, please reach out to us. We would be happy to help you navigate the road ahead with clarity and confidence.